Okay, I'm Dan Fitzpatrick at stockmarketmentor.com, and just a quick video on Broadcom. Now, this little red box here, that's something that I drew in our live training session today. And what this is, frankly, is kind of an oh crap signal, where if we're buying the stock here, and the reason the stock's up so much, other than the fact that buyers are a heck of a lot more aggressive than sellers, the reason is because the conjecture is that they are going to get approval by the EU for their acquisition. And that's kind of a big deal, right? And so both VMware and Broadcom are up. But what I like about this is the trading volume. We've still got over an hour and a half to go in the day, and we're close to the average volume on the day. So my suspicion is that this will be an above average day. And so I think even now you can buy the stock, but this is the caveat. See, again, it's had a big move, and I get it. You know, I always see people on YouTube and in Twitter tell me what a dumbass I am, and this the usual stuff. People say all kinds of stuff when there's no consequences and when they can be anonymous. But I'm putting it right out there, and this is my trade. You're buying this stock here. You're looking at the weekly chart, and you see a bigger breakout. Guys, this is institutional buying. The distance between the top and the bottom of this range is $230. All right. So we extend up $230 and we get 260, 270, something like that, depending on how you want to measure it. And so the point is, this still has a ways to go before it even completes this measured move on the weekly chart. Back to the daily chart, though, you're buying the stock and you always want to define your downside. And to me, this is how I do it. I say, all right, the only reason I'm buying the stock today is because it gapped up just a little bit. Okay, big deal. They all do. And then it ran up, and it is trading right now at the high of the day for the most part, down just a little bit, but it's up at the high of the day, which indicates to me, unless there's a end of the day selling spree or something, it indicates a really high closing location value. Where did the stock close within the intraday range? So I'm buying the stock. I think we're going to get more of a move up. I think this is a descending channel, and now we're going to get this kind of move. Okay, great. Well, what happens if I'm wrong? How do I know that I'm wrong? Well, this is an easy one, because I'm relying on today's intraday range as giving me a reference for where the stock's going to go. So if the stock comes back down a little bit, that's okay. I'd prefer it keep going, but if it kind of backs and fills a little bit, that's all right. You expect that after a 6% move. However, if the stock falls down below today's intraday low of 811.12, then I'm going to say, you know what? I'm wrong. I'm wrong on this. I didn't buy it because I thought the stock had pulled back. I bought it because I thought any pullback that did come would be fairly shallow, and then the stock would move higher. So what I've done is I've taken a very speculative position. I've put really about a 4.5% to 5% risk on the deal. And in the real world, if the stock were to start pulling back a lot, I would be looking at it on an intraday chart and then maybe get out early. But even with this 4.5% or 5% risk, I think that's a good risk reward trade. And you're always starting with a smaller position, and then you can add to it when the stock starts paying you off, when the stock starts proving to you that you're actually correct on the trade. So anyway, that's what I got going. If you have not tried Stock Market Mentor and want an opportunity to trade with me, Scott McGregor, and a bunch of other profitable traders, definitely give it a try. All right. You get a trial period. See if you like it. If you do, awesome. If you don't, that's okay too. At least you gave it a shot. Okay. I'll see you guys next time.